All right, good day, friends. It's another privilege to be with us today. Uh, we shall be continuing with our class report writing, which is for professional students. Then, for some of us that are just joining us, my name is Deji, and I've been a friend around taking us on report writing. Okay, for today's class, we shall be talking about financial analysis techniques. Financial analysis techniques, that is, what are the techniques that are needed? What are the tools that you can use to analyze your financial statements? What are the techniques that you can use to analyze your financial statement? We have a number of them actually. We have a number of them, but we listed some today because of time. We listed some so that as we go on, we'll be unable to finish on today's own. We will continue in a subsequent lecture. Okay, so financial analysis techniques. We have listed some by the left hand side of my board here, and I'm starting with comparative financial statements. That's one of the tools you can use to analyze your financial analysis, and financial statement rather. Comparative financial statement, that is, this is a financial analysis tool that you can use, that you have to place the years by each other. You place your years by each other. For example, if you state, this states something like this: revenue. If the revenue is here, you say 2022, you have 2021, and you have 2020. This is the one we are talking about now. Comparative financial statement. And we have cost. Let's say cost is here. Now, if revenue is, let's say revenue here is 50%, and this is 45%, and this is say 30%. And this was 25% here, and it was say 29% here, and we have about say 22% here. Okay, so what we are saying here is this: you have you have put the years by each other. That is comparative financial statement, by putting the years in by each other to compare the performances of either the operations or the sales, or whatever tool, whatever item you want to do inside your income statement. That is what we mean by comparative financial statement. Okay, the next one is common size statement. Common size statement. Now, common size statement is talking about making each of the item of the income statement to be 100%, to be in percentages. You now place your the each of the item on the revenue. I'm talking about income statement now. Let me write income statement. Income statement. Under income statement, you will make revenue 100%. Now, every other item in the income statement will be placed on the value of the revenue, and it will give you a percentage of revenue that it belongs. Let me give you a clearer example. Let's say if revenue is let's say revenue is 45,000 naira. 45,000 naira, or let's put dollar. And let's say the distribution cost is $4,500. Distribution cost is $4,500. I hope you are following. Okay, so what is the percentage of this, of distribution cost on the revenue? That is what common size statement is talking about. I hope it's clear. I hope it's clear. So what is the percentage here now? You just come here, say 4,500 divided by 45. I suppose this should be 10%. Is that correct? So here you write 10%. That is revenue. Sorry, the proportion of distribution cost to revenue for the particular year in question or under review is 10%. And that is what we mean by common size statement. You can continue other items of income statement like this. Okay, but the items under the statement of financial position, which is otherwise called the balance sheet, statement of financial position, SFP, statement of financial position, you will make the amount of the total asset to be 100%. Total asset, that is the basis that you are using under SFP. Total asset as what? 100%. Let me put it here, 100%. Now, let's say if total asset is, let's say, $100,000. Now, you want to prorate what is the percentage of what item do we have here? We have the item under current asset, we have the inventory, we have the cash and cash equivalent, we have the prepayment, etc. Let's pick the cash and cash equivalent. Cash and cash equivalent. Let's say cash and cash equivalent was for the period under review was 20,000. So what is the percentage here? I'm sure it's going to be what? 20%. So that is what we are talking about when we say common size statement. These are ways to check that, okay, in case you want to write a report. Now let me bring it home. You want to write a report on this particular entity now that has this figure. This is what you are supposed to say. You will say for the period under review, entity so and so, maybe ABC Limited or whatever, has a 20% of the total assets as cash and cash equivalent. For example, now what if in the preceding year, let's say this is for the year 2022. What if in the preceding year the cash and cash equivalent was, let me write it down here, was 10%? Was there, can one say there is an improvement in their cash and cash equivalent? This is how to analyze a financial statement using some of these tools. So you will now write that entity so and so has 20% of the total assets as cash and cash equivalent. Okay, and if it is 20%, this gave a sporadic increase from the preceding year, which was 10%. That is how to analyze a financial statement. Okay, I hope this is flowing. Actually, I hope you are getting it. Okay, let's move on to the next one, which is the one we call statement of changes in working capital. Statement of changes in working capital. Of course, for all financial persons, we all have an idea of what changes in working capital means. Okay, whenever you hear the word statement of changes in working capital, this is what it means. It means that you should compare your current assets with your current liabilities. I hope you're following. Okay, now the ability of the company, of this entity we are reviewing, the ability of the entity we are reviewing to be able to check whether they are good in terms of what they are owing others that they needed to pay within a particular year, and you compare with what they have. You understand it? What they have to pay that can be converted to what? To liquid easily. That is what they are talking about when it comes to working capital. I hope this is clear. Okay, so comparing the current asset with the current liabilities is the working capital we are talking about. The net of this is the working capital. However, what are we using these tools for? What are we using this statement of changes in working capital, and I said current asset minus current liability will show you the nature of your working capital. This tool is used to analyze the entity's ability to pay its current liabilities within a particular period, say 1 calendar year. Its ability to pay. For example, who is interested in using this tool? The creditors, short-term creditors, can just look at it and say, okay, let me check this consultant so and so, help us to check, can this company pay us back using what they have in the previous year? Can they pay us back if we give them this short-term loan? This is a way, this is what you are going to use to analyze such request or financial statement. Okay, I hope it's clear to us. Okay, the next one we're going to be talking about is the trend analysis. The trend analysis. Now, this is very sacrosanct. This is very important because for people who are writing professional exam, people who are writing report writing, for some of us that are writing case study in ICANN or ACCA and so on and so forth, if you are writing professional exam, report writing in professional exams, you need to know how to use this tool very well. This is one of the cheapest tool you can use that will give you volume of work, of what to write, and you write logically and sensitively. You understand it? Okay. Now, trend analysis, what does it mean? Trend analysis is in a way similar to the comparative financial statement, but it is not the same. What is the difference? The difference is, the similarity is this: you are comparing, here also you will be comparing years. You can say 2017, 2016, and 20, let's say 15. These are the years now, isn't it? Okay. Here, the difference between trend analysis and comparative financial statement is that this has a formula. This trend analysis has a formula. I will go straight down to the formula so that it will be clear to us. Okay, the formula is new minus old all over old. New minus old all over old. Let's say, for instance, that 2017 has, let's say it has 1,000 naira, 2016 has 800 naira, and 2015 has 600 naira. Let's take new minus old all over old now. If you have your calculator with you, try and compute. This is your new. The most recent year is the new. Bear it in mind, the most recent year is the new. The earliest years are the old. So let me take them from, I will take them from 2015 to 2016. It will now be 2016 figure minus 2015 figure divided by 2015 figure. I hope this is clear to us. Okay, so whatever figure you have here, just substitute it. You have under 20, which is equal to 2016 is what? 800 minus 2015 is what? 600 divided by 2015 is what? 600. Okay, I hope this is clear. What answer will this give you? It will give you 200 divided by 600. Okay, this will give you 1 over 3. Now, the answer you are likely to have here is 0.333. I hope this is clear to us. Okay, and it is otherwise known as what? 33.3%. Okay, this is the work of trend analysis. You've been able, and the meaning is this, because we are talking about report writing. How will you now put this in your report? You are going to tell us that, let's say for instance, when we computed, this figure was for cost. Let's say the figure was for cost. You now tell us that there was an increase in the rate of cost, or in the cost that was used by entity so so and so, increment of about 33.3% from the year 2015 to 2016, which could be translated, or which can be translated to $200 increment. I hope this is clear to us. You understand it? Which can be translated to $200 increment. That means that is 33% of whatever is here is $200. Okay, so whoever is reading your report will now know that, okay, these people did well, oh, but this is the rate at which they did well. They will use the percentage and this. Now, quickly, while I explain that to us again, there are tools that you have to know. There are some things you have to know when it comes to trend analysis. Please, let's bear these figures in mind. I will still call our attention to it. When it comes to trend analysis, okay, trend analysis has two major results. Gives you two results. Trend analysis gives you two major results. It gives you one percentage result, and we have what is called absolute figure. In report, you are allowed to write it as ABS. Let me write it properly. ABS. ABS. It is called absolute figure. And what does it mean? Remember the one we just computed now? We said the increment was $200. Is that correct? And the percentage was 33.3%. So this is the absolute figure, and this is the translation in terms of percentage. So these are the two results that trend analysis gives you. That is, when you say that 2016 minus 2015 all over 2015, what does it mean? It means this will give you a figure which is absolute in nature. Let's say the dollar, which is 200, and by the time you are now dividing it by the denominator, sorry, this should be 2015, by the denominator, which is $600, then you have multiplied by 100, then you have a percentage amount. Is that clear to us? Okay, so that is trend analysis. Now, friends, I must call attention to something. I will still devote one class for this trend analysis, and I will use one of the case materials that have been done in past questions to solve a class for it. But for the sake of today's class, let's just bear this in mind, that trend analysis gives you both absolute figure and percentage figure. And you must, as a professional report writer, use both percentage and the absolute figure. And while you are making references to this, you must make it very logical. You must make it very formal. You must be very, very formal about it, logical about it, and you must choose your words correctly. Now, I must quickly add to it that whenever you're writing report, please bear in mind that the person, your examiner, also has an emotion. Play around the how to captivate the mind of whoever is reading your report. And in this case, we are focusing on your examiner. I hope this is clear to us. Okay, let's bear it in mind. I'll still talk to us on trend analysis. Please, let's just follow our videos. It will come up very soon. All right. The last tool for today, for today's class, but not the very least, is the one that is most popularly known or used. The most popularly used analysis or tool is the ratio analysis. Ratio analysis. This is very common, this is popular, and of course, a number of people have idea of what ratio analysis means. Ordinarily, we say ratio analysis is the ability to compare one unit of an entity with another unit of the same entity to give you that has similar relationship, that has similar, what's it called, similar attributes. You understand it? Okay. Now, having gotten that, we have 5 subsections of ratio analysis. There are various forms, but it has been professionally grouped into 5. They have been professionally grouped into 5. You understand it? Okay. And I listed those 5 here on the board. Number one, I said, so that you can be following me as I'm giving you all this. Now, number one is profitability ratio. The profitability ratio talks about the ratio of the profits, and it talks about how profitable is this entity. The ratios that talks about how profitable an entity is what is called the profitability ratio. Okay. Number two is the liquidity ratio. This talks about how liquid the entity is. How liquid the entity is. Like I mentioned something to us when we were talking about working capital. I said it talks about the difference between the current asset and the current liability. The same thing is this liquidity ratio. Liquidity ratio talks about the how is easy is an entity having the funds to pay back, convert funds that either in cash or in cash equivalent, to be converted to or to pay back their debt within the same debt within the particular year. I hope this is clear to us. Okay. That is number two. Number three, we said, is the efficiency. This shows how efficient. Now, first, note that I did not give us examples in this class, because I'm still going to give us a class on this ratio analysis. On ratio analysis, there will be a class, so that in that class, we'll take a question and we'll solve together. Okay, I hope we are following. Now, efficiency also shows how efficient the company is performing. The ratio that shows the efficiency of the company is what is called the efficiency ratio. Okay. The next one is the solvency ratio. We call this solvency ratio, or we call it leverage ratio. Now, what does this mean? This is the ratio that talks about the capital structure of an organization. It talks about the capital structure of the organization. That is, when you say capital structure, you are talking about the debt, you are talking about the equity, you are talking about the assets of that organization. So the capital structure talks about debt, equity, debt and equity, It talks about what percentage is debt in the organization, what percentage is equity. Okay, so that is what solvency and leverage ratio is talking about. The very last one is the ratio investment ratio. This talks about the investment part. This is the portion that all investors of the business are interested in. All investors are interested, both the current investors and the potential investors, they are interested in this part of the ratio analysis. That is, if they are doing well here in report writing, you must let us know that in terms of investment, okay, in entity so and so is doing well, or is not doing well, or don't seem to, etc. That is how to use some of these things as tools for analyzing your financial statement. I hope this makes sense to us, and I'm sure we will be seeing us in the next class. Okay. But before we go, please, let's try and like our pages. Let's share them. Let's share the pages, and let's subscribe, and let's invite other friends, so that we'll keep enjoying ourselves in this lecture. My name is Deji. One more time, I appreciate you for your attention, and I will see you in my next class. Thank you.